day, Thursday, March 4th, when OPEC Plus is set to meet and declare their hand for at least the next month, if not the next quarter. But as things stand, there's a lot of second guessing going on. Let's kick off with our regular commentator on Thursday, Dr. Carole Nakhle, CEO of Crystol Energy. Carole, good morning. It's nice to see that it's actually bright outside now rather than dark, so it means spring is in the air. Carole, your thoughts for this day and the outlook of the market at the moment, which is opening in Asia a little change.
Good morning, Sean. Good morning, everyone. Indeed, that's why I changed a bit my background, because now there is some more light, though I'm not quite sure it's ideal for the video. Today, since yesterday, things seem to be changing, because remember, Sean, that around the 23rd of February and for until maybe yesterday, we had the longest decline in terms of streak, not in terms of value necessarily, in oil prices. And it has been halted in the last 2 days, primarily on rumors that OPEC might roll over production cuts for the months of April. So we're all now engaged in a kind of guessing game, but hopefully that will be clarified by the end of the day. Hopefully there won't be any dramas. I mean, the last meeting of OPEC was pretty smooth, but this one will determine what they will do, at least for the months of April. And there could be some normal or expected tensions between various players, but we'll of course reach an agreement. What would that be? It's interesting to see, for example, Mohammed Barkindo, it was in one of the articles that you shared, striking a more positive note than usual. Usually he's very cautious, talking about the uncertainty. He still refers to the uncertainty in the markets, but this time he's kind of more confident about the outlook of the global economy. And I fully support that, because despite the ups and downs with virus infections, now Brazil went into lockdown, other places emerging, but overall the train is heading in the same direction. That is an economic recovery, at least for the end of the year. For the longer term, of course, structural problems continue. And Sean, mind you, people start to talk, scientists are talking now about potentially a chronic pandemic. So I don't know how much more so. Now we're watching OPEC Plus on a monthly basis, but will OPEC Plus become also chronic as the pandemic becomes chronic as well?
Well, we're going to have to see about that. It's a lot of chronic stacked up together. Let's go to Kuwait and have a chance to speak with our Sara Akbar, who is the CEO of OiLSERV Kuwait and non-executive director of Petrofac. Sara, since we last had you on, of course, oil prices have recovered quite dramatically. I'm wondering, from your perspective, where do you think OPEC Plus needs to go in their decision next? Do they need to protect prices or bring back more barrels?
Well, I think we should keep a balance between each government's, each country's needs and what the market needs. So in the history, if we learn anything from the history, is if we push prices too high too quickly, it will fall. And to get back again on track takes much longer time than the fall that we see. Always coming back is much more difficult than the drop. So if we have learned that lesson, I think the gradual increase in capacity is the way OPEC should take it. So gradual increase based on the situation in the market and the needs of the supply, the demand side, and not to jump and flood the market, because then the reaction is quick as well. And we have noticed over the last few months, the volatility in the price is very big. So the drops and the comebacks is quite dramatic. So I think the gradual increase should be their mechanism. I think for April they should increase something like 500 up to 1 million barrel into the market, because there is genuine need. And the ease off that we see now, for example, in the UK, in parts of Europe, I mean, Texas, they already said no mask, I think, something like that. So there is gradual opening of the economies, gradual relaxation, which demands that we put some more crude into the market to keep the levels acceptable and not to harm the economies, because we shouldn't forget that many countries are still economically hurt from the pandemic, and they cannot
But
afford.
what about Kuwait, for that matter? Obviously, you're sitting in Kuwait. How is, as an OPEC Plus member, Kuwait fiscally? Is it in a good place? Does it need higher prices? How vulnerable is the fiscal position in Kuwait?
No, Kuwait is a different situation, because Kuwait, we have a financial crisis now in Kuwait. It's basically cash management. I think, I mean, if you can see the papers in Kuwait, last week, the government requested, they sent a bill to the parliament to take money from the sovereign wealth fund, because they couldn't, they don't have enough cash into the bank accounts in order to pay the salaries and all the requirements of the government. So definitely, Kuwait needs something like $80 for the fiscal balance. But there is no way we can get to the fiscal balance that we need, and none of the GCC countries. So yes, this is what we need, but we should not forget the needs of these other big economies that live in oil, and they are still hurt as economies, and they are in a worse position than we are.
Indeed. We had India on earlier this week, sort of screaming for some relief. Chris Wood, the Chief Executive Officer of Savanara DMCC. Sorry, tripping over my words this morning.
Get used to it.
Yes, get used to it. That's true. Chris, your thoughts on the market outlook. I do want to get to your comments on this sort of restructuring of ADNOC pricing and other things that we have in the digest today. But in terms of this market bounce that we've seen this week on the sort of rumor mill that OPEC may indeed actually not increase or increase by very little, where do you think the market is at for its appetite for more oil from OPEC?
As we've seen over the last 6 months, the market clings on to any hope to try and drive up or change the price and get some volatility in the market. I'm hoping that the OPEC look a little bit beyond just the short term and a bit longer term. As we heard from Mike yesterday from Bloomberg, there's a lot of hedging going on, which is an indicator, potential indicator of shale maybe coming back, and they need to think about that. As prices drive up higher, it has a number of effects, as Sara said. It hurts economies. You think the road fuels, the marine fuels, and all those that are higher cost now than they were 6 months ago, when those economies are still struggling. But then also, the price signal is potentially bringing investors back into the shale, into investment in upstream and that. So when the market is still at a low demand level, it's not quite the best place to be sort of sending a strong signal for investment into that market. So I'm hoping that OPEC in today's meeting takes that sort of little bit longer term view on where things are going. They've always stated that their policy is around supply demand, not price. And hopefully they're looking at that. The challenge is they've all been hurting for a long time. I think OPEC were 3.5 million barrels down from this time last year. So that's a lot of lost revenue for them, and a lot of lost production. So from that point of view, I think it's going to be a difficult meeting trying to get that balance between, should we increase, what is that figure, or should we remain the same? And I think the markets are hoping it's going to remain the same by the price.
Carole, we've gone from, over the last year, from an incredibly transparent and rather detailed roadmap from OPEC Plus, that how they were going to return the 9.7 million barrels of oil that was cut in April last year. It was very detailed. On this day, we're going to do this, and then we're going to do that. To where we've ended up today, as you started out your comment, in complete silence and guessing game as to where the next move is literally a few hours' time. Which of these two strategies do you think best serves OPEC Plus at this time?
Definitely, there is a major change in the strategy. But mind you, when they came up with this agreement in April last year, everybody was, not only OPEC Plus, but even major international forecasting agencies, they were expecting the economy to recover. Everybody was talking about the V-shaped recovery as of summer 2020. That did not happen. So therefore, OPEC had to revisit its strategy and chase the market, chase demand, oil demand, chase global economic recovery signals. Because to be fair to OPEC, I mean, we are dealing with an unusual circumstance, something that people have not faced for decades, and I doubt anyone would remember what happened in the last century, in the early days of the century. But there is a downside to that strategy, because I was thinking, yesterday about it, what OPEC was doing. I was thinking that we are all becoming like oil traders, tracing oil prices on a daily basis. But oil markets are much bigger and complex, and one has to take the bigger picture and the longer term perspective, because investment in oil and gas do not happen based on daily price volatility. They take into consideration a longer term direction for oil markets. So on the one hand, you have, yes, OPEC Plus may be saying that they have greater flexibility in deciding what they do as it trades the market. But on the other hand, I'm not quite sure how healthy that is, whether for the OPEC Plus producers themselves, budget planning, even investment undertaken by national companies and investment undertaken by the private sector, whether this would be a healthy thing to lack this kind of transparency and overall policy direction, especially at a time when they are sitting on massive spare capacity. That said, I believe that when you have this kind of trying to boost prices on a short-term basis, that really the main beneficiaries of this strategy would be the shale producers, because they would be able to hedge future production for a year or two max, for example, whenever prices go above a certain level. So on balance, I personally think that OPEC should go back to its conventional strategy. That said, I recognize the uncertainty that they are currently facing in terms of market outlook. But what matters for oil markets is the overall direction of the train, not the day-to-day changes that most traders follow.
But Sara, on that point, of course, you're sitting at the supply chain end of this equation with OiLSERV. That we did see the major companies and the nationals all cut back quite dramatically and quite quickly last year on new production, on the supply chain budgets. How is that looking now? Are we seeing that trend line shift, as Carole is suggesting, perhaps that the outlook for the upward trend in oil prices bringing back companies like your own and the supply chain to develop new supply? How is that looking?
So in every country, of course, the impact has been different. So in some countries, the impact on the business itself was small, not big. So the activity level did not go down dramatically. It went down more dramatically because of COVID and the restrictions than it was due to the oil price or anything else. But in some countries, the activity level went dramatically down. And I can mention that in the south of Iraq, for example, the activity level went really down. And now slowly they are coming back because they think that, they would be able to pump more in time. But overall, I think with the spare capacity that already exists in each of these countries, the activity level did marginally change than before the oil price drop. Like I said, it's mainly because of COVID and the restrictions, and you have only 30% people in the office. They can't follow up on all of this work. I think once we are over this period of restrictions because of COVID, the activity level will improve. But
when you have 8 million barrels of idle capacity, both inside OPEC, Kuwait, and other countries, what is the incentive to invest in new production?
A little. It's just maintaining that capacity. So most of the activity that is being conducted is to maintain the capacity rather than to increase the capacity.
Chris, I wanted to ask you about, any other day of the week, the two announcements we saw yesterday would have been headline news. Maybe they were for a few moments, but we had ADNOC for the first time in its history removing any destination restriction on all its crude oils from June of this year, I believe was the date. And secondly, we had a split in Brent where the ICE Futures Exchange announced that they would be carving out a second separate Brent futures contract because of some changes that Platts were making in the composition of its benchmark. I wonder if you could kind of look inside that, give us a bit of a layman's understanding of what is the importance of those two things, starting with the ADNOC decision.
Certainly. The ADNOC one, I think, was inevitable at some stage. It's a little bit earlier than I was expecting. With the market demand where it is, customers are asking for destination clause changes so that they can optimize their contracts. A lot of the rest of the world don't have those sort of restrictions on anymore. They took them off a long time ago. So it's also helps with the trading around the Murban and other crudes that they're going to be pushing out there. So that gives more flexibility. Otherwise, if you continue to have your destination clause, you struggle to
and the destination clause ultimately means that when you buy a tanker of crude oil from ADNOC, you cannot resell it. You cannot send it anywhere other than where you have stated in your contract it is going to go.
Exactly, and that limits the buyer side. So a lot of destination clause, whether it's China, Singapore, you're stuck with whoever is going to be buying it in that region, rather than saying, look at the globals. And I was talking to someone through yesterday about the margins in various parts of the world on the Arab heavy and Arab light. And the crack margins in North America versus Europe versus Asia are very different at the moment. So you want to have that flexibility to swing your cargoes where you want to go to gain that value. So I think ADNOC have made a good decision here. It's also part of their trading strategy with their new trading team. Well, not so new anymore, but that allows them more flexibility as well to optimize their barrels.
And the other decision by the ICE and Brent, ICE and Platts, essentially kind of having a little bit of a fallout around Brent?
I haven't looked at that one in too much detail, but I expect it's to do with the changing in the basket of what makes up Brent and what the pricing looks like.
Yeah, basically what Platts have announced is the intention to include WTI into the Brent contract because there is so much crude oil now coming out of America being exported. They see that Brent as the benchmark for global oil, WTI being included in that basket is more representative of a global benchmark.
Okay, so they're trying to keep Brent as sorry, I hadn't followed this one at all. So I'm hypothesizing now, but they're trying to keep Brent as the global reference point by bringing in the WTI.
Yes.
It's a tricky one because there's geographic dislocation. We saw WTI take a very deep spike last year. And do you want that affecting the North Sea Brent price? I'm not sure a lot of those producers would be happy.
There's clearly a lot playing out there given the circumstances. Carole, as you mentioned in your opening comments, how significant is the COVID pandemic? Are we over it? Sara also mentioned that in Texas, they're lifting restrictions only to generate a comment I haven't heard in a while from a US president that was a Neanderthal move by the governor of Texas. And we also have other strains emerging. Does OPEC Plus, when they sit down today, have to think about that this pandemic is over or it's not over?
I doubt this pandemic is going to be over anytime soon because of the risk of new variants emerging, but this doesn't mean that it cannot be kept under control. And that's why I mentioned earlier the concept of chronic pandemic that more scientists are referring to. And Sean, of course, I'm everywhere you can see that things, maybe not everywhere, at least here in Europe, I'm looking forward to Monday because I'm finally having a haircut after months and months of growing all this Amazonian hair. But so things
Neanderthal
are easing.
hair.
Neanderthal
even
hair. So even here, things were pretty strict over the last few months, are easing gradually. And
well,
because
we
of the
included
rollout.
a story in our digest today of a bombing in Holland where there was growing frustrations with the lockdown that had
Indeed.
actually manifested something of that nature.
There is frustration everywhere. There is fatigue. People are tired. They just want to go back to some kind of normality. And we're going to see that thanks to the rollout of vaccination. But again, it doesn't mean that the problems are going to be over. There are some problems that will be over, but there are others. I mean, Sarah mentioned earlier the debt, the fiscal deficit. It's not just about the oil producing countries. Everywhere you find governments, corporates, households, they have accumulated tremendous debt. And that raises the questions of what will happen next. Already we saw yesterday in the UK, the gradual increase in taxes that's going to come, even with bigger increases in the coming years everywhere. So that's something to watch for, and that will have an impact on business activity,
well,
on consumer spending.
In the UK, they announced corporate tax increase to 25%, I believe,
25.
from 19.
Exactly. And more to come elsewhere also, Sean. So all these we have to be mindful of in terms of talking about pandemic coming under control.
As I said to somebody last night here in Dubai, property prices in Dubai are going to go up because taxes in the UK are going to go up. But that's another story. Let's get the room's view on this change of strategy in OPEC in terms of their messaging. In year one of the OPEC Plus deal, the strategy has moved from a transparent roadmap for return of the 9.7 million barrel per day cut to forcing oil markets to second guess next supply move, which is what we're in at the moment. So we kind of had 6 months of like everything's predictable to 6 months of I've no idea what's coming next. My question is, which approach will be more supportive for prices in the second year of this agreement? Because this is a 2-year agreement. At least that's how it was announced last April. So in year two, should OPEC continue with its sort of silence and guessing game or go back to transparent roadmap? I suppose they'll do what best serves their interests. And that's the question. Which do you think best serves their interests? Sara, your thoughts, please, on that question and the strategy for OPEC Plus going forward.
Yes. So if a strategy works and delivers results, why should you change it? That's always the question. So because of that transparent strategy, we are here with more than $60 oil. And I think going forward, this strategy works. So I think the fear in OPEC is the comeback of shale to the same kind of levels from before. And, you know, shale is not part of their deal. So that's why now at this level of pricing, they are playing this silence and guessing game rather than the transparent game.
Well, the transparency was very important, Sara, in the early days of this agreement to maintain discipline so that every country was being exposed, if you like, when they were not complying. And as prices grow, and that's why I'm sort of emphasizing year two of this agreement, if we see prices continue to climb up towards $70 a barrel, we could see compliance slipping. And would that not be better served for a transparent environment rather than one that's a little bit cloistered?
I think, you know, I'm a big advocate of transparency and everything. So I think being transparent and keeping discipline will maintain the prices. But if they go to the route where they keep guessing and playing this game, they will lose it, I think, because people will definitely cheat on this, and then you are back to square one.
Chris, I've been rather amazed and impressed in different ways of the discipline that OPEC Plus has shown over the last year in alignment with this agreement. And now to the extent where they're even disciplined on their silence, and that of course is quite relevant also in facial expressions in the land of Zoom, as OPEC meeting was yesterday and will be today, what they even revealed from that point of view. What's your own thoughts on this idea, the idea of transparency strategy versus keeping the guessing game going?
From my experience, transparency comes from when you have a clear vision and you have an alignment amongst people. I think with COVID, there's a lack of clarity on where the future is going. And also there's a lot of debate going on within OPEC of what's the right tactic. Both, we talked about the sort of economies of the OPEC countries, but also about the production and increased capacity going forward. So I think there's real debates, real discussions happening in these meetings, whereas previously it's been quite clear, the roadmap has been very clear. And you've seen it happen in various organizations that they're no longer focusing on dates anymore, they're focusing on key data trends and saying, when we reach this level, then we need to do something. But until that stage, we're going to have to hold fight. So rather than keeping people hoping for a date to either come out of lockdown or OPEC increase, decrease, I think that they are debating of what's the right triggers. And you see more and more data coming out of OPEC for that. I think
we saw, Chris, another big data point that they're focused on is inventories. Yesterday, the EIA reported a massive increase, unprecedented, obviously due to the ice storm in Texas. But nonetheless, my question, Chris, is how should OPEC Plus, as they look at this as part of the ingredients of their decision that the inventory decline over the last 6 months is working, or versus this temporary moment where US oil production was shut last week and inventories built?
I'm glad you asked that, because I was just looking at the data beforehand, and if you look at the IEA data on global on the inventory, we've only just come back to midpoint of the 5-year range. Now, if you look at that, that's a 5-year range of normal demand. We're still below normal demand. So in theory, we're above. We still have excess inventory in the system. So I wouldn't be too worried about it. The only thing that I'm worried about or looking at is we've got an increase in WTI. We've got a low demand and a reduced demand in refining capacity. Are we heading in the same direction we did last year with WTI? I hope not, because suddenly you're starting to have an inventory build. No one being able to process it and take it off. Will WTI see a price drop again? And that's something to just...
You mean a unique moment in which the fundamentals around Cushing forces a crash? That's interesting. Let's get the survey result before giving Carole the last word today. Silence and guessing, 58%, transparent is 42%. As Sara says, if it's not broken, don't fix it. Carole, your thoughts for the rest of this week on what your expectation is for OPEC Plus?
Clearly, it seems that COVID has caused serious damage to the concept of transparency that people have been calling for years. Well, look, I mean, for me, just want to comment on that result. I think just to refer also to what Chris and Sara said about the importance of discipline. For me, just you can see this kind of rolling over production decision on a monthly basis is kind of, gaining flexibility, but also it can send signals about the difficulty in convincing members to act as a coherent entity. And this is not the image that perhaps OPEC wants to portray to the market looking further ahead. For the rest of the week, I think we already had some interesting developments in the States with the fiscal stimulus. We're going to see how much more convincing Biden is going to do to get his package passed through the Senate, although we're not going to know the results before a while. And also, Sara, some noises coming from Australia, for instance, about what they want to do with their fiscal stimulus, and they want to scale it down because they fear about what will happen next in terms of market, putting upward pressure on inflation, and so on. And I'll be watching closely really what happens with the meeting of OPEC. That is the most important, perhaps, outcome if they reach an agreement today.
Well, I think we'll wrap it up there. I think it's interesting this week that we've seen, again, included in the digest today, now ExxonMobil's turn to tell the world that they're not going to be rushing back into shale. It seems to me that they're all communicating with Vienna at this point in time that don't worry about shale. We're not going to be coming back at you. So make your decision with that on board. There might be a number of mom and pop shale producers who will jump back in at these prices, but the big boys, Exxon, Chevron, Oxy, are going to be holding their fire. And I think that in a way is a clear message to OPEC as they make their decision. What OPEC does with it, of course, is another question. We will find out sometime later today, one would imagine. But Sara, thank you so much for joining us from Kuwait, and Carole from Germany, and Chris from Dubai. I wish everybody a safe and productive weekend, and we'll catch you all next Sunday, where we'll have the two wise minds of Christoph Ruhl and Mike Muller to give us the sort of dissection of where OPEC Plus decided to go. All the best. Take care.
Thank you. Bye-bye.